Right, up and running. Start real quick with where we are on equities, because obviously that's been the one to watch on the opens of late. I'll run you quickly through chart-wise where we are. One important feature of what has happened overnight is the move up to that 86 level. Talked about this numerous times, this little range here. So we've been up there now, tested it. The next sort of other key area that I'd be interested in is down here, 58, 54. So this was that little range from the other day. So that's your sort of key bits that I'll be looking at so far. In terms of then bringing it down to what we're going to be looking for today, what you've had overnight is drop down once again down onto this area, these previous cash highs down at the sort of 45, bottom of value 40 area. And then we bounced back. So yesterday we had, again, that ferocious sell-off, chop, 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 close higher, which is very similar to the previous day as well, which was that one. So the question for today is, do we see the exact same off the open, drop out the sky, 40 handles straight line down? If you do, a bit like we did the previous day, I think what you have to do is set your stall out of, right, well, where do you want to go and have a go at this as an idea for the potential sell? If we're sitting where we are now, I'm inclined to look at this 58 area. 58 is the top of this sort of previous little range over here, so the sort of overnight bounce before yesterday's sell-off. We've started to form a bit of a range above that. I think if you go through 58, then you can start to look at 40, which gets you inside of yesterday's range. If you do that, then I think you're looking at repeat of yesterday, at least in the short term. So through 58, through 40, then it's a question of whether you go down to here, sort of 21, which is the point where you got that breakaway the day before last, so Wednesday, the top of the value area, previous VPOX. That would probably be about as far as I'd be looking, so as to not get trapped looking for too much, and also be aware that this will be the third day of it if it does it. If it does, everyone else is going to be thinking, it bounced the last 2 days, don't hang around. So as it comes off, you may well get people then try and buy it back on that basis. So that's just something to be aware of, which would then limit my expectations of quite how far it would go. I mean, if it does the same again and you get 40 handles, I'd be pretty pleased with that. The other thing that you need to consider, so I think the open could be really important today. The other thing to consider is after sell-off and bounce, people are not able to sustain a move down when they sell. If you do start to get any bid up, you have the possibility that anyone who has tried to buy it recently and got washed out early on, or anyone who has sold it and not given up, because really we haven't gone that much higher and we're not above 86, you have the possibility of then getting liquidated up as well. So don't assume it must go straight down, but I would definitely be sitting there with that as quite a sort of key potential idea for today. We'll come and have a look at that when we get to the open anyway. So I think it's probably pretty worth a look. Right, let me just get that one back. Okay, not got loads to cover on this one today, but just wanted to sort of set out weekly prep, what you want to be doing over a weekend, a couple of different ways to kind of assess trades that you've taken on, make a sort of assessment of your performance and a plan for the following week. You know, it's one of these things that I know you don't have to spend your life planning, and it's one of the things I hate a lot. I'm not particularly planny type of person. I don't like plans that much. But having an idea of what's going to be important next week, what you want to be watching, what is relevant to you. So sort of guiding yourself towards certain aspects for next week is a good way to go into the week ready, rather than going into the week thinking, oh, what am I going to do? When am I going to do it? How am I going to do it? So I'll sort of talk through a few different aspects there. Here's your Bund trade. It's dropped right down into, so just to cover that, we're talking about this P-shape situation in the Bund. We've dropped right down into the support, which incidentally, if you get Bund chart up, that's the support. It's sort of the highs from earlier on this week. Not much else here. So really, they're sort of double O. You've dipped into it, dipped through those single prints, This, I think, is decision time for the Bund for today. Either you fall through the single prints, and this way you bring it down to a shorter time frame. You get into the single prints below 02, which is where we are now. You've broken the VWAP. We get in there, and everybody who was buying it all up here thinking it's going to go, it's going to go, it's going to go, it's going to go, is in trouble, and this rolls over. Remember that bonds have not been particularly good at staying up of late. They don't seem to like it when they go up. So we fall into the single prints. This could then wash all the way back down through the run up that you got on the French and German PMIs this morning. 62, I think to go much beyond 60, you might be asking a lot on the day, but to fill the single prints down there, I think looks quite reasonable. So it is just right now, this is decision time. If it can get back up above 02, then I think this is just a test of the people who have been sitting there long, and we go back up here. If it can't get back above there, then you start looking at that rollover. So I don't, this is one of these situations you've got to pick your way. Is, do you think this is it and it's staying up today, or do you think that it's going down? You're going to get lots in the meantime whilst it's going to sit there and essentially chop around until it works out which it wants to do. And it's probably not going to be particularly quick. The other point to make on that as well is if you look at it on a 5 minute, real quick there, a lot of people who are buying it are probably looking at 90 and thinking, well, it held in here, I don't need to get out of this until it goes below 90. So if you are looking for any kind of acceleration on the downside, I'd be surprised if you get that much before 90. So that's the other thing just to consider. If you're looking for movement down, it doesn't have to be quick. It could dribble lower, and it's only through 90 at the point, at which point then people might go, okay, now we need to go for it and start to run for the exits. So we'll keep an eye on that. It could be influenced by the equity open as well, which might have a little bit of impact on that. Okay. Trying to get a little clock up. Okay, there we go. Right, okay. So, over a weekend, what I don't want to tell people is, oh, you want to work all weekend, you've got to work hard, and you've got to do this, and you've got to do this, and you've got to do this. I think you want to give yourself a little bit of time at some point to just go over the previous week. The reason for doing that is it gives you a better chance of actually absorbing the information rather than you just having collected it during the week. So you kind of try and put it to use. Couple of things to do, and a way to actually try and put it to use is to actually try and extract something from it rather than just looking back. Because if you just look back over something, what you do is you remember the easy bits, you remember the stuff that you remember. Yeah, if you think of a film that you know quite well, you could probably summarize that pretty easily, and it would be the core bits of the film that you remember. Now, if you then went and watched it, having just summarized it, you'll pick up on all the little bits that you don't really notice in the film because you've covered the stuff that you remember. So it's one thing to go and summarize it, but then try and extract something from it really kind of embeds the understanding of what's happened and the information that you've gained throughout that week. Right, few different suggestions on ways to do this. First, look at performance. You can do this where you made money and where you lost money. But I'll just go through it step by step, well, day by day, morning, afternoon, where did you make money? I've sort of split this out based on 5 categories, which are the sort of 5 categories that I suggested at the beginning. And all I would do is just put what markets you made money in. So that like even if at the end of the day, you're down in Euro stocks, you may well have been making money technically in the morning and you've lost it on the macro in the afternoon. So you could distinguish this in one table by colouring it or however you do it. Just put made or lost, which market and in which sort of category of trade. That way, you start to pick up patterns of what you do well, what you don't again. And you're also starting to understand, or you start to sort of see whether what you've actually done on the week really matches up with the action on the week. You know, if you came in this week and you made all your money on unscheduled news on Tuesday, the Russia-Ukraine or the Russia nuclear threat on Tuesday, I think that's reasonably fair. You know, if you made a lot of your money on Wednesday, Thursday on very technical trades in the Bund, in the S&P, again, I think reasonably fair. Friday, basically the entirety of today so far has been a data point followed by some just reasonably straightforward technical trading, and that's been about it. So what you're trying to sort of capture is your performance aligned with predominantly what the market dynamics have been, but also just generally where do you perform. You don't have to do it as a big table, but it's just quite a good way to actually get you to think about what you did during the sort of different phases of the week. You can really split this up if you want and do European morning, lunchtime, pre-US, etc., and have it in sort of 5 sections. I don't think you need to get too granular. I think if you start getting too granular, you start ending up looking for very, very specific situations in future that you're not going to find many of, and you're going to end up with this sort of so many variations of things that it becomes confusing. Even if it's just to go down the line of being able to say, do you know what, I'm really struggling in the mornings at the moment. Straight away, what you can do with that is, one, go and look at why precisely or what it is you're struggling on. I've done this in the past of going through trades and realizing that I'm actually just creating a little hole for myself trading the European pre-cash IB, so the 7 till 8. So that just produces a simple trade. What I started doing was turning up at 7, not at 6:30. So then I'd still force myself, I'd still do my prep. So I couldn't trade because I haven't done my prep. That just solved the problem instantly. I wasn't digging myself a little hole. I didn't need to be in a little hole just because I've done some prep and now I can do it and go and act on it. And that's my natural impatience coming through, that I've done some prep. Well, now I need to do something with it. And markets open, they start moving and start clicking. So a lot of the time it's about being able to find just a few things that you can easily solve on the losers is one of the first things to do. But also, don't go mental trying to review every trade and everything you've done well. Some trades are just run-of-the-mill trades that you've looked at and gone, that looks like a sensible buy. It bounces, you take 5 ticks out of it. Good trade. That's it. You don't need to go and review that and look into your execution and all of the rest of it. You're probably not going to gain a great deal from that. Pick 3 trades that you think were particularly well executed, particularly well planned. If it's something that you're trying to improve in the way that you've traded and you've done reasonably well on them, go and look at those trades in a little bit more detail. But your sort of just standard run-of-the-mill trades that you're doing, I don't think need huge amounts of investment of time. Again, you've got to actually give yourself the break to go and do whatever else you want to do in your life and come in on Monday feeling ready to do some trading, rather than you spent your whole weekend thinking about it and Monday now becomes significant because this is the chance to enact all of the things you've been thinking about and planning and doing and all of the rest of it. It's something that can just be done over and over, and it becomes quite a sort of straightforward, simple thing to do. It also serves as a bit of a base point that if you're going through your sort of tilts and your frustrations, things that come up commonly for you, you can start to understand any kind of patterns of where and when these things start to happen. If you had a day where it was an extremely technical day and you made no money trading technicals, does that bleed into the next day type of thing, or do you try fighting the previous problems? So reasonably straightforward thing to go and do, but emphasis on don't get too detailed. Get down the basics of the information. It makes it easy to sort of review what's happened, be clear on what's gone on. Do a bit of detail on the things that you want to try and improve. The other thing, summary of market dynamics as well. What this does for you is just keeps you on top of narrative. It also means that you're understanding stuff more. And if there's stuff that you don't understand, this is the chance to then go and actually try and find out about it. Try and understand it. It can kind of direct your research for the week, or for the weekend. Going and finding out about Ukraine's missile capabilities, what they could do with it, what the situation is broadly, what's happened in previous. The Crimea situation is probably the most obvious thing to go back and have a look at. But how have these things generally sort of played out over the longer term? How could a solution come from this? That's what you want to start going to have a look at. So what you're trying to do here is just summarize the way markets have traded broadly. So where you saw volatility pick up, how markets generally traded. A bit like the previous, what you're trying to do, rather than from a performance perspective, you're trying to do it from just an understanding of narrative perspective, how markets have done what they've done. It just keeps you very much on top of what's going on, sets you up for the following week as well. That if you just take a bit of time to look at this, go, do you know what? Oil's not doing anything. Gold seems to be quite clear on what it wants to do at the moment. That's a feature of what's been going on, the way markets have reacted to things, the way they've traded generally. You're just starting to give yourself a bit of guidance for the week ahead. and what you should be doing going forward, what you should expect to be doing as the week goes on. So that's how I'd kind of try and sort of break those types of things down. Again, you don't have to do it in a big table. This, like with a lot of things, could be done just in your head. It's just a case of, are you asking the questions? Are you thinking about what happened, why the market traded in a certain way? Even just by being able to summarize what happened before going and just going back through the information you put down in your day-to-day debrief, it sinks that in a bit more for you, because you've already kind of had to actually think back and work out what's happened, think it through, and then you can then come to some conclusions on that just simply by having actually put the effort to try and think back through what happened. Any chance we can turn up the volume? Let me just check my mic's on. Yeah, it might be where it is on my, I think it's where it is on my jumper. In the corner, there you go, on my t-shirt. There we go, that should be much better. All sorted. Okay, get some dynamics down. Last table for you. This is probably the main thing that I want to try and do for the week ahead, is just a little bit of planning out of what exactly is coming up, so that you can not assign risk or apportion risk throughout the week, but work out where you need to have more focus, where you need to have effectively given yourself some time to plan. You know, a lot of managing your week ahead is actually thinking about, well, I don't want to get myself in a situation where I miss out being ready for certain types of events or surprised by things. The big feature of this week is Thanksgiving and Black Friday. You have got multiple data points on the Wednesday at not their normal times. So that's something that's going to be quite important. This is something I've not seen before. I can't think that we've ever had this. And I believe it's to do with the fact that everything does seem to be closed on Thanksgiving. I put the link in from CME website. Typically, CME is open on Thanksgiving, at least Globex. It's short hours, but it is open. Seemingly, from what I've read on there, it seems that it's complete shut, as will be the New York Stock Exchange, the NASDAQ, all of the rest of them. So this, I believe, is a complete shut. So you have got PCE earlier. What you basically got is a reasonably quiet week in terms of data. No scheduled speakers at the moment. With the speakers, this is something that's probably worth checking on, say, a Sunday, because a lot of scheduled speeches may not be planned yet, or you don't know precisely what day they're going to be. So it's worth just updating it. I had a look at earnings as well. There's no major earnings out this week either, so nothing to worry about in that respect. Earnings are not something that someone's going, oh yeah, by the way, we're going to release it on Wednesday. Yeah, they know when they're going to do their earnings, so the schedule there is reasonably clear. CNBC's got quite a good earnings schedule. Investing.com has actually got a reasonable earnings schedule, so you can go look at that. Monday is going to be reasonably quiet. You've got German IFO in the morning, and that is it. So I would be going into Monday thinking you don't want to push it too much on Monday. What you do have from the general market dynamic situation, the general themes that are running through markets at the moment, is anything over the weekend, which I think is relevant for today, in that come the end of today, you got to ask yourself, how much would you want to be long equities into this weekend? I wouldn't. I'm not suggesting that causes a sell-off, but it's something perhaps to consider going into the close of today. If the equities start to drop going into the close, I wouldn't be too keen on thinking that you're going to actually get a great deal of, excuse me, I wouldn't be too keen on thinking that it's going to bounce on that. So if it starts to roll over towards the end of the day, I'd be relatively confident to go with that, just based on that overall theme. But Monday, I would assume to be a relatively quiet day, not loads and loads to be done. The other feature of this week as well is it's the end of month on Friday. Just bear in mind people's desire to get rid of business before the end of the month, being as you've got the US holiday. Tuesday is relatively quiet, but part of your planning, it's Fed minutes on Tuesday. This might give you a little bit more colour as to what the Fed was talking about, or it should give more colour on the question of December in particular. You know, was there any suggestion at the meeting that the Fed is not going to cut in December? You know, was that something that was talked about? That's probably the main thing you want to be focusing on. But what it also suggests, make sure that you've got that planned out, so it's going to be a longer day for you. It all sounds reasonably simplistic, but it's the kind of thing you don't want to have come in early doors on Tuesday and thinking, oh no, I'm not going to be leaving here until 7:30. Tuesday evening. So just make sure you kind of know. Wednesday, important to note, possible early closes. It doesn't seem like that from the CME one, but I haven't checked New York Stock Exchange, so you may get early closes in the actual cash markets, in which case you will just get complete dead futures markets post. Typically they'll shut at 6 o'clock UK. So if NYSE shuts early, something to go and find out, you're going to get the knock on that. But what it's also done is it gives you US GDP at 130. That is along with multiple other things, durable goods, an inventories number. They may bring jobless early. I haven't actually seen jobless on the list of data this week. So jobless possibly as well. That is probably going to be a mess. I would take the time on that to prep for core PCE, which on the whole is not always the greatest mover in markets, but being as it is the same day, you may get a bit of reaction to that. It would also suggest that US GDP is probably also going to be seen as not really the one to trade, because the fact that you've got PCE coming up after that. It's also during cash hours, which is very rare. Well, I say it's very rare. I've never seen it during cash hours, but it might just give it a bit more of a kick. It might give it a bit of punch in terms of movement on it. So that's the big feature there. Thanksgiving, typically everyone will be, well, US Day will definitely be off. Most people in America will go home early on the Wednesday and go on holiday. So Thursday will be dead. However, you have got German CPIs. So if you're planning your day out, this is a day, I would always come in with the mindset, I'm calling it a day at midday. Obviously we won't be, but I would be thinking you want to call it a day at midday. So come in, trade them for what they are and don't go looking for too much more. That would be the way that I would try and approach that. There's an argument and some people will look at it this way and go, it's going to be dead quiet, just forget it. I don't need to come in for this. You want to be confident you're going to perform on German CPI. You know, if you don't have any back history of doing any good on these, perhaps it's not really the one to trade because you're not going to get a chance to make your money back. Oh, yeah, just we'll quickly flip the S&P up. Right, that's what we've done so far. Bearing in mind, we are a minute in, so I wouldn't be rushing for this. I think 76 is probably the level. Now, on the way we've traded the last couple of days, what we've seen is it has a charge one way at the open, a rip back, a sort of 2-3 minute revision of what it wants to do, and then you get the move. So I think break 76 might be quite keen to try and go with that and play for a similar move to yesterday to the upside. It already feels like he's not quite got the same sort of ferocity in it. It's a little bit more subtle. It's gone up. There you go. It's having the roll back, but it's not sort of exploded in sort of pace just at the moment. NASDAQ incidentally has gone through the low. I'll bring the NASDAQ in as well, just for completeness. So there's your NASDAQ. So NASDAQ's actually whizzed it through the low reasonably quickly. Incidentally, my NASDAQ is on a 4-tick compression. So it's one tick. One tick is 4. It's just in big ticks rather than anything else. But yeah, at the moment, it's doing what it's done the last couple of days, where we test one way, we test the other, we test one way, we test the other. So you've still got the potential of something in this, but it definitely feels lighter in the way that it's trading. It's slightly intangible, the lightness, but it definitely feels slightly lighter. On the S&P as well, 68 was on the profile, that really big volume ledge. It was basically the top of yesterday's IB. We held above that as the close from yesterday. So 68 is pretty important, 76 pretty important. We are doing very similar to the last couple of days, so 2-3 minutes of sideways, and we'll see how it goes out of here. Anyone got position? I know Emmanuel's short NASDAQ. Standard stuff, always short NASDAQ. There we go, it's touched 76. And the uncertainty continues. Definitely starting to get a bit of action around 74 in the S&P. So try and sell it. We saw a bit of this yesterday, where they drop it down and sell it and sell it and sell it and sell it. I wouldn't be too keen to go, oh yeah, that's it. It's definitely going down, from seeing a little bit of selling at 74. but you're starting to bring back a little bit of the feature of the way it traded yesterday. Each time Nasdaq's saying, each time it goes to the high, at the moment it gets to the high and it rolls back and gets to the high, maybe a tick through and it comes back. So it's kind of struggling on the upside at this point in time. It needs, if it's going to go, you want to see it release itself a little bit.
I think if it breaks maybe 830, 840, it should continue on.
Yeah. I think that's the thing. It needs to get past a point where it can actually go, because at the moment, if it keeps running into this reasonably persistent selling, which is what we've seen in recent days, that is sell and sell and sell on the open, you start getting that. There you go. You're getting these 200s coming into the S&P again now. If it can't sort of get that drive up, that's where it's then going to start to struggle once again. Yeah, you're seeing it now. The Nasdaq's not breaking the highs as the S&P creeps through, and it's a creep at the moment. So this may be one that's not going to give you too much on the open. This week, you also need to just not get too sucked into, oh, it's going to be like yesterday and it's going to be amazing and it's going to go fly in one way or another. At the moment, it doesn't really look like a great deal of anything. You know, it's put in a choppy opening range. I think if you really like the idea, you could go for the break of 76.5 in the S&P. It has this little push down. It's not. It's not sort of backing off. That's the sort of positive side of it. But yeah, this feels a lot messier than yesterday. It feels a lot more sort of stuck, effectively. I think until it sort of opens up. Even if you buy it here, you could buy 76, and I wouldn't be surprised 2 or 3 minutes later it's still trading 76. It may have showed you 78 or 79, and then it keeps on just getting stuck around this area. So I wouldn't really want to be long here. It definitely feels like there's still a desire to sell. There's still some degree of attempt to try and sell this, even though they're not doing a particularly good job of it. There's definitely some sort of willingness to, there you go, 100 odd came up, it's bang, it's hit it. The Nasdaq feels like the one that's trying to pull this up, and the S&P is acting as like a weight on the S&P here. Question from Grimy, how do I set up my VWAP on a 1 minute chart? It's literally just VWAP. So I just leave it on the default settings, wherever they are. Because volume weighted average price is volume weighted average price. So it runs from the beginning of the session, basically.
Sorry, how did you change the tick range?
The tick increment, go onto the magnifying glass,
Yeah.
click on it, and when the little box opens up, it's got tick increment or tick multiplier, or whatever they call it. There you go. Right, well, we are a little bit stuck at the minute, so I don't think we'll keep on watching what's going on. Like I say, it doesn't seem to have that ferocity of sell-off. So if it's going to be anything, I would be leaning away from that sort of ferocious sell-off now. I think we've had the chance for it. Right, I'll cover the other bits. Oh, and it's cover, okay. Yeah, so you need to have a little plan or a little think about what you're going to do for German and Spanish CPIs. Same as well for Friday. The other thing to remember for Friday as well, it is month end, markets close early. So there's two aspects to this. One, make sure you know or find out what time the markets that you're trading close. Europeans are obviously normal, but the US ones, make sure you look at each individual thing. So oil, gold, treasuries, S&P, whatever you're going to trade on it. Make sure you know exactly when. The other thing to say on that, and I don't know whether they will or they won't, but on early closes I've seen in the past on, say, New Year, for example, on a sort of bank holiday, when it shuts, it shuts. There is no post-trade. You know, typically, New York Stock Exchange shuts at 9, the S&P futures trade on. If this says it shuts at 6, I believe it shuts at 6. Therefore, if you have not got out of a position, you're in. That's it. You're in for the weekend. So make sure, one, you find out when it closes, and do not hold the position past the end. Otherwise, you know, you're going to have a very, very uncomfortable weekend. Particularly, well, whichever way you are. If you get stuck long S&P or short S&P, assume that that's probably going to be the last thing traded. I wouldn't want to be either going into the weekend, really, if this Russia situation is still there. So something just to think about. on that. So yeah, I'd get your week planned out in that respect, so you know where your days that are going to be busy are going to require a lot of focus, who are going to have multiple different events going on, versus the days that are going to be probably more technically leaning / lacking too much by way of sort of clear news or drive to them. There you go. Now starting to see a little push through the highs in the S&P, but without the Nasdaq. Right. Next bit in terms of your planning out of what you want to do on the week is just go back through all your charts. What I'm trying to do here, and again, this you don't have to write all of this out, but just try and work out for yourself what's kind of in play. Which markets, if you've got multiple markets you might be wanting to trade, which markets you really feel are actually going to have something in them for the week, and what those things are. So I'll run you through a couple of level ones in a moment, but also the sensitivity to news. A good thing to do here is you create it in a table or just go through 1 minute charts on any pieces of news and check the way that markets react and whether they sustain movement, which ones react fastest, which ones react strongest. By getting that information down, it enables you to better plan what you want to try and hit going forward. Wowzers. I think it's looking good. Yeah. And the key bit now is that is it, and I think that's where you have to just sort of step back, don't get sucked in, and go, right, there is a plan. This is the trade I'm going to go for. I think if it gets over 86, it starts to look very good. Yeah. This is the decision now. If you're long from there, do you take 86, which would be the first sort of key point where it could back off from, or do you hold it and go for the? Yeah, the break was really clean. Really, it's got a liquidation feel to it. That move up, it was very straight line, very little two-directional trade. It's got the feel of basically the way it went up through, or the way it's gone up is very similar to the way it went down in a way now. Now that it's actually started to move.
One of those where if you were expecting the reverse of yesterday and the day before, if you're expecting it to go down and then you're trying to sell it into this strength, right?
Yeah.
The same thing as you're trying to do.
The one takeaway from the last couple of days is don't feel that this is too much. Yeah, it's done what? 15 handles up, 20 handles up from the low. If this is going to be any repeat of previous days, if you're playing it through above 86, it's probably worth a risk on it. I don't think you want to be holding the risk for too much, but as long as it stays up here above 86, similar to what it's done recently, builds some volume, and it goes. Alternatively, that was the one shot to 86, and that was it. So we'll see. This way, you can't really hold this back too far here. I think 83 is probably about as good as you can get. This is the kind of one that if you play that, you kind of wait, it drops, it stalls. Which again is why I don't like to just have a stop placed. If seen it's done about 83.5, I think that's probably the low now, as in for a stop. If it trades 83, you're probably wrong. If it doesn't go back to 83, then this could well be the sort of liquidation type move. That we're looking for. US PMIs, yes, you will. Yeah, the US PMIs are going to be, just a moment, about 30 seconds to US PMIs. Sorry? I'll try and call it if I can find them quick enough.
Is it a big deal? Is it a red?
No, it's not a hugely important one. The ISM data is the bigger one, which is on Monday. There you go. Much higher. 57 versus 55.2. Actually, I say much higher. Yeah, it's going to be taken as bullish for equities. Yeah, at the end of the day, it's good news for the economy, right?
Yeah.
So the tricky bit with that is it's a hard one to take in terms of like rates, improving economy, the justification for rate cuts.
But doesn't that push dollar up, which pushes equities down?
I'm never that keen on the dollar equity relationship.
Okay.
Dollar's been rallying and rallying and rallying for well, basically since the election.
Yeah.
So I would more look at this as a, it's positive for the economy, it's good for dollar. The bonds are the straightforward one here, because if this is good for the economy, you sell bonds, you buy stocks. If it's less rate cuts, you sell bonds as well. So the bonds are more straightforward on this than the equities.
If we wanted to go higher, we could do it, the S&P going higher, we could do it consolidating a little bit here so it doesn't have a massive IB.
Yes, yeah, for a sustained move, definitely. This is where, if you're in, you either want this to just go and do the whole thing in one now, or accept that it's going to wait and churn, stall, and then go and do its thing. Yeah, data like that in a market that's already going up is just, it's an extra reason to sort of get on with it. It's now just a case of how the market wants to take that, whether it wants to see this as actually good news or less rate cuts, not so good news. Right. So to come back to where we were, new sensitive markets, this is then just a case of going back through the sort of big feature news pieces of the week or just gone and trying to work out the way markets are reacting, how sensitive they are, which ones sustain movement. What's essentially, you're asking the question of what do I want to hit on the next data point? The next news comment from Russia, the next data point, the next whatever it is, what market do you want to hit on that one? Relative strength, this helps in terms of picking certain trades that you might want to take on. The main thing here, US is much stronger than EU equities. Whilst you've had that recent sell-off, the European equities have been going down basically since the election. The US ones went up, 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 and have reversed some of the election move. So you've got a sort of very distinct, if you want to play a negative equity move, Euro stocks is probably the better place to play it. You look at the size of the move this morning, granted it was European data. Whereas if you want something positive, the S&P is the place to go. So it helps in that just determining where you want to be. You see it as well, the euro is particularly weak at the moment, even compared to any of the other currencies. So then you get this situation, weak euro stocks, they're all going down together. That's what I'd essentially call the Trump trade. The difference between the European and the US equities on the tariffs type of play. You've then also got the dollar is basically just stronger than everything. So one thing that I would be watching was this just general dollar strength. If that changes, you could view that as a kind of precursor to a change in a lot of the features that we've been seeing of late. The whole Trump trade idea that if the dollar strength goes away, then you can end up with a situation where perhaps the US and European equities start to switch. And you start to see more of a catch up from things like Euro stocks compared to, say, the S&P. Correlation wise, it seems at the moment, based on theme, this is just a straightforward risk on, risk off. So that's the kind of thing you need to go back through the weekend. How have the correlations been? What's been the sort of key correlation feature of the week? And also, what do you expect it to be going next week? You generally assume the same again. I'm not often going to be looking at that thinking, no, it's not going to do the same again. Assume that that's now a feature of the way markets are trading. The other thing that I thought was quite interesting, and this is something to watch with equities, is this seeming stagflation trade now. That what you're getting is the short end is selling off and the long end is rallying, or it's at least not selling off. So you're getting this kind of, from a curve perspective, the short end of the curve is moving up and the long end of the curve is staying flat/down. And at the same time, gold's going up. So the gold's decoupled from the dollar at the moment. Prior to this week, dollar went up, gold went down. Since then, or since the beginning of this week, you're now getting what I would call this kind of stagflation play, where as the 2 years are selling off, or at least not going up, the 30 years are rallying or not going down with 2 years. That's then the point where what you're starting to get is gold rallying now, and gold's the way I would view that sort of stagflation play. They think that you could get inflation back, lack of growth, no change in rates, and that's the way that you're going to see it.
Did you mean that we're seeing stagflation in gold right now?
It's the only way I can interpret, like, gold that was so dollar linked since the election is now completely not dollar linked. Okay. This week, if you just look at like a euro dollar chart versus a gold chart, and in fact, I've got those, That's what the euro's done. That's since the election there. And the euro's just gone down, 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 which is a good indicator of the dollar. The election's up here and gold's gone down and up. So you're getting that sort of very different type of structure of movement. And so all of this week, if you just take this week, that's what gold's done. Whereas you take this week in the euro and it has gone sideways / down. So, and yeah, that's the same if you look at the pound, if you look at the yen against the dollar, any of those. The difference being that the euro seems to be the weakest of them all, but they're all generally moving in that direction. But if there's one market that you want to try and trade against the dollar to the downside, as a dollar strength move, you'd be looking more towards the euro than anything else. In terms of the other bit that I'd be looking at, significant levels, the reason I put the euro up here is this whole feature of massive dollar strength of late. You look at that euro move and you look at today, and granted there was European PMIs. Now, I don't think I've seen a European PMI move like that since 2022, when everything moved miles on every bit of data. That's a huge move at the bottom of what has been already a very long-winded down move. That could be the exhaustion. That could be the end of this. So it's not say it is, but what you've got to start thinking, and this is what you're sort of trying to plan out for the week ahead of, well, if that is, and we start getting back up above 105.10, is this the beginning of the turnaround of a lot of the sort of action that you've been seeing of late? Gold already seems to have turned around. Maybe gold's the precursor to it all, but also if the euro does turn here, that could be the beginning of a shift back, at which point you would expect that equity relationship to flip over, that you get European strength, US weakness, or relative between the two. That would be something I'd be watching out for if we do start to get that situation coming in. So that's going to be one of the key things to watch for the week ahead. The other one, less of something that I think there's much to be done trade-wise, but gold has had a very steep sell-off the week before and a very big rally back this week. I would expect gold to have some degree of just stabilization. It's had 2 wild weeks, and then you had the US election week as well. It seems like a market that's probably going to consolidate. So it doesn't mean that there's loads to do necessarily in gold, but what it suggests, or what you're trying to do, is then plan out where you do want to be active. Gold for me would probably not be the place, just on the basis that it's a relatively non-data influenced shorter week, and it needs some degree of sort of stabilization in it anyway. So that's the way I'd be trying to look at gold. The other thing that I want to be doing on a weekend is trying to come up with any sort of significant trade opportunities that you think may come up for the week. These are the kind of things that you can kind of plan out how exactly you're going to take them on, and what are you going to do in these sort of very specific circumstances or very specific trade situations. Concept that one of the traders got is what he calls a dominant trade idea. So this is not to do with generally where you think markets are going. This is to do with an idea around, are there a couple of very specific trades that you want to do irrespective of where you think markets are going generally, and trades that you believe should be relatively easy to monetize. These don't have to be huge. They have to be like gigantic, big, planned out structural trades. It's about trades that you can go, right, if we get here, we're going to move from here to here, and I want to be part of that, and it's going to be a clean move. It's going to be a move that you feel you could not predict, but be very confident in the nature of it, how it's going to do it. So something that you could be confident you can monetize. These are the ones that you can plan out. I'm not necessarily someone who's a big fan of visualizations and all of that type of thing, but you can sort of go through, effectively sort of run through in your head the steps of how you're going to do this. If this situation arises, what am I going to play for? What am I going to do? How am I going to play this trade? So that if and when it does arise, you're ready. You're there, you can take that trade on. And that's the way that you can then go about it. Give an example of this. I think this is probably a good one for next week, assuming it doesn't do it today, which is the S&P into this range. It's a very well traded range post the election. We've tested it once already. We're testing it at the moment. If it gets in there, you've got the VPOC up there at 60.15. I would be looking for that to be a reasonably straightforward, clean move through. Your kind of classic sweep type trade. This is one of these situations where ideally I wouldn't want it to do it today. It'd be really, really nice if it stays here today, backs off, churns around this area, and then goes for it on Monday. Because it's getting a bit long in the tooth for the week. It's getting, you're getting towards the end of the week. It's probably not going to be the easiest move today. If it does it at the beginning of next week, that's going to likely be a much cleaner move. Whereas this week's been, let's face it, a pretty messy week. It starts off here. You've tried all sorts of different things, and it's then to get this to then sweep itself all the way up at the end of the week, I think is probably a bit of a stretch. But that would be one of the main sort of dominant trades that I'd be interested in. It plays into the S&P remaining strong. It plays into sort of quite a clean range move as well. So you've then got to just plan out how would you want to try and take this trade on. So if it gets above 86, you've already got a plan for it. You know what you want to do, you know how you're going to do it. Gets there, you can execute that, you can be ready for that trade. It's less straightforward on the entry point on this one. I don't think there's sort of an absolute crystal clear entry point. You're like, yeah, there it is. I'm in, this is going to go. But the whole idea of the trade is there. These are the kind of ones to plan out so that if you do get the opportunity, basically to run this 85, possibly to sort of 60-40 or at least 60-30 area, you're looking for a 40, 50 handle move. That's the kind of trade that you need to sort of plan out how you think it's going to play out. So that when it's doing it and it stalls along the way or whatever it does along the way, you're at least a bit ready for that. You're comfortable with that as an idea. The last one that I've got is Euro stocks. That is not a good low down here. That would be one I'd be definitely looking at as a play if you can break 47.25 to shoot for the low. So you get sort of 25 tick drop there. That would be the one I'd be looking for. It may not come up. The other one you could perhaps argue is the break of this week. Euro stocks this week has been pretty muted. Whilst the S&P's had a pretty wild ride, Euro stocks has not really done a great deal of anything. It's been pretty stable for most of the week. So on that basis, I think you've got quite a clean break either way in stocks next week. It's either 48.04 or 47.25 to then break 47.00. And when on the break of 00, the thing that I'm looking for here is this is just open space below. So if you do get anything negative European equities, I think Euro stocks has got a lot of value in it. So that's why I'm trying to do dominant trades. There's not loads that I want to be doing over a weekend. I don't want to be overthinking stuff, spending the whole weekend thinking and planning and all the rest of it. But just get down the stuff. So you come into Monday, and right, I know what I'm doing this week. I've got my roadmap. I'm set. I know what I'm doing. I know where I'm going for the week. Right. Starting to see these bonds starting to rally again now. Not seen any news.
There's no one selling there, they just have to decide and just have to go to market now.
Sorry?
There's no one really selling down there, they just buying and starting to go to market now.
The bonds?
Yeah, 2 year and the bond. I don't know what the bonds do.
Oh, right. Yeah, it does seem like this is the trade we were talking about in the Bund to go down. It's got down to the 90 and it wouldn't go. So, it's now a case of, that was that battle. The people who bought it, they never got pushed into enough danger. The data flicked it down, probably caught some people out, but outside of that, they've not been pushed far enough to get them out.
You don't know if it's gonna.
Sorry?
How would you assess now if it would?
Well, I think
Continue going up or?
I think this is one where the structure is there to keep going up, right?
Yeah.
I'd be looking at that. If you're going for a long on this, it's just come up in a relatively straight line, which is never great if you're looking to buy. There you go. So there's your 1 minute. You could look at this and go, well, you can try and buy effectively the top of this range as a kind of little block and then reverse up type trade. So you kind of try and buy it down there. And then you're basically playing the rotation up the profile again in the same way that it's done it all day. So you're playing it on the idea that it fell down to the bottom of that range. It had the chance to go lower. It tried it. It failed it. It's now moving back up. You could then play it up from here. So that's one sort of approach to it. It's not really got that much flow in it because it is a liquidation and now a balancing type move. These are naturally your much more sort of technical type of trades where you have to just go, right, this is my play. I'm getting in, I'm staying in for this, and I'm going to try and run this. Yeah, essentially what you're trying to do is run it back up the range. If you look at the profile, the bun's not got a particularly good high. So you look at that profile there, that's a pretty bad high. So that, yeah, ultimately your target's to go and break the highs if you're playing this. You need the treasuries to help you out a bit, and they're rotating back up the range. So particularly if you're looking at the bund, my go-to then would be the 10-year.
This might be a long day. It might take some time.
So if you're looking at 10-year, that's where we've been trading for much of the morning. We just had the wash down. If you can get back above 22.5 in the 10, then that might be the chance to go up, and that would sort of help the bund on its way. Yeah, at the end of the day, the bund's the one that's strong here. So the 10-year getting up will be enough to sort of carry the bund with it. It's just it needs something to actually get
But I
going.
mean, with the play, like you need to identify for example, you have to see if there's an exhaustion in the volume, or if there is a slowing down of orders in the depth of market. If we're going to see a reversal in like let's say price is pushing up right now,
Yeah,
it pushed up, now it's just reversed,
yeah.
right? Like to anticipate this reaction,
Mhm.
we need to watch do we need to watch the DOM, see how orders are coming in? Is it slowing down? Is it increasing?
I think less so, because this is a very technical type play. Like even that move you just saw there, I'll see if I got the footprint up, because this is doing the thing I hate the bund doing, where what it likes to do, here you go, pin that one up. That move there that it's just dropped down, right? That traded thousands. It just dropped on about 200 lots and dropped through 5 prices with 0 trades the other side. Basically what it's showing is it just empties out. And so it just does this, boom, empties out, moves, and then it starts to trade again. That's something you don't really want to see, because what it's going to do is sort of shake you out of a position very, very easily. It's not an easy trade to be long and just watch it just melt 10 ticks against you. If anything, it would probably lead me towards going, I'd just leave the bund alone. Even though technically the idea is fine, it becomes a really uncomfortable trade, and it's quite unpredictable. You are moving into rollover for bonds at the moment, so that's part of a feature of it. Any kind of drop like that, I'd never believe is going to stay down. Yeah, there's no selling in that. That's just all the buyers just pulled the orders away. So I would have no belief that this stays down. How far back it goes, though, is then dictated by whether it runs into any resistance here. You start to see there's a lot more volume being done here. I think the bund feels like it's quite manipulated. So there's not much to look for on the ladder as such. It's more a case of, like say, you almost pure technical it, and you just go, well, technically I think it's going up. I'm sticking with that. Yeah, you're looking at it on the ladder now. It's just gone O2s, churn, 400, 450. So they've kind of paused it at O2.
I think it still wants to push though, for those single prints, or is it not gonna?
I don't know. Like I say, I think if it was going to go, surely it goes then. That was your chance to go, and it doesn't.
Yeah.
But then this is where I think you're probably just going to see a lot more of this, just like melt down the page, whip up, melt down, whip up, melt down. Really, really ugly. Like I say, there you go. You see it just traded 97. There you go, tick, tick, and it's trading below. There's definitely some degree of manipulation in this at the moment. So the ease with which it can take out 3 or 4 prices, followed by then churning 500 lots. It can't get through one price by trading at 500, 700,000, and then it can trade through 5 prices with 200. Suggests a market that actually a lot of this is not really there. It's there when it wants to be. See, now they do 500 at 99, and then it's just traded through that price on 40 lots. Traded 8 lots, 300, and it trades straight through. So it's floating up and down here. Unless you're in at the edges of this becomes really, really uncomfortable and really, really easy to just get caught out losing money one way or the other. I will wrap it up there though. Grimy, what are your opinions on market internals, tick, add and void? I've never heard of add and void. I've heard of trin. I've never really used them. As with any of these types of things, if you can find a use, and just be clear that you need to be able to identify in a situation like X, if I see tick doing Y, I can do Z, and I expect a certain result. Just looking at them generally, I don't think offers a great deal. You can end up sort of, attributing movement to them when you want to, and then not at other times. So it's got to form part of your analysis. It's got to form a sort of clear element of your strategy and your thinking, rather than just simply be, you know, something you look at. For me, I've never spent a great deal of time looking at it. I don't want to get overly influenced by the fact that one company's on a rally or not. So that's my view. I know that Mike watches these a lot, and I know that there are quite a few other traders do. So it's not to say they're not useful, but just be clear on where and when you use them. Right, I will wrap it up there though, guys. Have a great weekend. Do your prep over the weekend. Set yourself up for the week ahead. We'll do a fair bit more in terms of, you know, get people's trade ideas up, plan out what's going to happen for the day. We want to start looking at a few trade ideas as they come in throughout the days and see how we go about executing them. Right, I'll leave you there. Have a wonderful day, rest of the day, weekend, and I'll see you Monday.